Big updates just dropped from the Fed, the White House, and even the SEC, and it could change the entire crypto market. The Federal Reserve just cut rates by 25 basis points in September, with 2 more cuts expected in 2025. Lower rates mean cheaper money, and historically, that pumps crypto prices. Next, President Trump is talking about $1,000 to $2,000 stimulus checks, funded by tariff money that could land in your pocket. And, yep, of course, a noteworthy portion of that money will go to crypto. Then there's the big one. Over 30 altcoin ETFs like AV and Link were just filed with the SEC this week. If approved, this will bring institutional cash into altcoins, potentially driving 10x to 50x gains. And with whispers of quantitative easing, money printing starting soon, liquidity could skyrocket. The image from Ash Cryptos says, a printing press churning out cash while the Fed watches. But remember, past bull runs came with risks like economic shifts or government moves. So, while the hype is real, do your homework and follow us and our news updates. The Russell 2000 has just broken its 2021 high, something it failed to do for nearly 4 years. Why does this matter? Because the Russell tracks 2,000 small-cap U.S. stocks, the highest beta, riskiest names in TradFi. When they pump, it means capital is flowing back into risk. It's the clearest macro signal that institutions are rotating again, just like they did in 2020 to 21 during the alt season. And here's the real kicker. This is happening even as BTC and ETH are already near their all-time highs. That's the signal. The rest of crypto usually accelerates after small-cap equities break out. Pair that with more rate cuts in 2025, 20-plus crypto ETPs being submitted in a day, Treasury buying $6 billion plus of its own debt in a week. October being up only month, Q4 being historically the strongest quarter for crypto and stocks. The Russell breakout isn't noise. It's the first real institutional signal, and crypto's rally might be much bigger than you expect. DeFi, or decentralized finance, is all about financial freedom. No banks, no middlemen. But most DeFi platforms are fully transparent, meaning your transactions are visible on the blockchain. That's where confidential lending comes in. It's a game changer that lets you lend or borrow crypto while keeping your financial details private, using advanced tech like zero-knowledge proofs or encrypted smart contracts. Think of it like a secret handshake for your crypto wallet. So why should you care? First, privacy. In regular DeFi, anyone can see your wallet balance or loan history. Confidential lending hides that, protecting you from targeted hacks or nosy competitors. Second, it opens doors for bigger players like institutions that need privacy to jump into DeFi. And third, it's still decentralized, so you're not handing your data to a shady third party. This is how it works. Platforms that offer confidential lending use cutting-edge cryptography. When you borrow or lend, your transaction details, like the amount or your identity, are encrypted. Smart contracts still handle the deal, ensuring trust and security, but the juicy details stay hidden. Projects like Aave with privacy integrations are leading the charge here. Of course, it's not perfect yet. Confidential lending can be slower or more expensive due to complex tech, and regulators are still figuring out how to handle private DeFi. But the future? Bright. As privacy tech improves, we could see confidential lending become the norm, making DeFi safer and more inclusive for everyone. KETA is a layer, one blockchain built for speed, handling up to 10 million transactions per second. That's faster than Visa. It's like a bridge connecting crypto to traditional money, making global payments instant and cheap. Think sending money across borders in under a second, with all the legal stuff like KYC built in. Oh, and it's backed by Eric Schmidt, ex-Google CEO. Pretty legit, right? So, what problem is KETA solving? Most blockchains are too slow or expensive for real-world money transfers. KETA's fixing that with lightning-fast, compliant payments that work with banks and crypto. Imagine sending money globally as easily as texting Kita's trying to make that real. If they pull it off, this could be huge. $KTA is Kita's token. And let's talk about $KTA use case. Paying fees, it's the gas for transactions on the network. Staking, lock it up to secure the blockchain and earn 5 to 12% rewards yearly. Voting, you get a say in how Kita grows. Real-world assets, use it to create things like stable coins or tokenized real estate. In short, $KTA powers a blockchain that's trying to make crypto as easy as using your bank card. Let's dive into tokenomics. Kita has a total supply of $1 billion KTA, with about 425 million circulating. 40% is locked for the team, no quick dumps there. It's mildly inflationary to reward stackers, but it's controlled to avoid crazy dilution. Price-wise, it's at about 55 cents as of October 2025, down from a high of $1.14. Volume's picking up, but it's volatile, typical for a new project. Right now, $KTA is literally on sale, good place to get in, but prepare for another leg down in case. If that's happened, use that chance to DCA. Every project has risks, so here's the real talk. Kita's super centralized right now. That's not fully crypto yet. Mainnet launch was a huge success, but it's new, and the mainnet hasn't proven itself at scale. It's up against giants like Solana and Ripple in the payment game. Whales could dump, and new regulations could mess things up. Crypto's risky, so only invest what you can afford to lose.
Thank you so much for watching. If you found this video helpful, please don't forget to like, share with your friends, and subscribe to the channel. Your support really means a lot. See you in the next one.